I don't think that it would have been possible for Twitter to create a business model that was based on being paid by the people who are receiving the value. So, subscription model of some kind. Nobody understood what they were going to get from these services early on.
One of the things that's so kind of strange and unnerving about the AI era is somebody could now fall down an extremist conspiracy rabbit hole without even a community of people coaxing them to do it, but really just alone with a chatbot.
Hi, Rabble.
Hey, Alice.
So this week we have two wonderful guests on the podcast. We have Brad Burnham from USV, one of the original Web 2.0 investors. And then we have Zoe Weinberg, who is a newer VC based out of New York. Her firm, ante, focuses on investments that are oriented around giving people agency back and digital freedom. Tell us a little bit about your relationship with Brad first, and then how you kind of got to meet Zoe as well.
Yeah, so I got to know Brad through various friends and through people who were working on companies. Union Square Ventures was the lead anchor VC that really believed in Twitter in the early days. They also invested in Tumblr and Etsy and a ton of other companies. They were sort of the Web 2.0, the early social media investor. And what really stuck out to me about Union Square Ventures is that they had a social conscience. They advocated for platform co-ops and for public benefit corporations and for the idea that we should have B Corp accountability and that we should have a system of businesses that gave back to the community they're supporting. And so that work from Brad and USV is really interesting. And I got to know Zoe much more recently because she was one of the principals behind the Resonant Computing Manifesto, which we've talked about on this podcast, which is a call for computing technology and for Silicon Valley and for tech to build things that make people feel better, build things that make people's lives genuinely better, as opposed to just building businesses that extract and that make us feel worse. Zoe is a younger, newer venture capitalist, but both of them are people who say, they are investors, they are VCs. And I wanted them to talk about the role of venture capital and the way in which it can build businesses and how it doesn't necessarily have to be the exploitive negative experience that so many VCs do. Sometimes I, as a far leftist anarchist who believes that we need a radically different way of organized society, sometimes people criticize me for starting companies and for working with VCs. And the thing that I talk about in this, and the reason that I had them on the show, is because it is so much more complicated than that. Like, we exist in the society we have today. We have the incentives and the businesses and the government structures, and we need to work within this system if we're going to change the system, even if we want to radically change the system. And so there are people within VC who want a better world, who want to use this leverage to make a more inclusive society and make a democratic society and make a society that has human agency. And so that's why I wanted Brad and Zoe to come on, because they're examples of venture capital that is having a real positive impact on the world.
Yeah, and I think to your point too about like your position in this ecosystem and how people view you, like, you can't change what you don't understand, right? So I think that's one of the things that kind of sets you apart, is that you do understand how it works. You have worked within some of these larger companies. You've been there at the beginning of some of the biggest ones. You've made these amazing contacts and connections, but you've defined a very clear and differentiated point of view that enables you to create change as you go.
The point of Revolution.Social was to make these conversations public, to make it visible so you can understand the how and why did we get to the world. We have technology industries, we have a technology world, we have social media that has shaped everything that's going on in the world. And yet so few people understand the who and the why and the how of it coming to be. And so I'm having these conversations with all of the principals throughout the story to make sense of how did we create the world we have today.
And to make it accessible. Absolutely. Okay, well, let's take a listen.
Today at Revolution.Social, we're talking to a couple venture capitalists, and VCs or venture capital has such this sort of boogeyman reputation about the way in which companies get funded and the role that they're doing. And so I really wanted to have Brad and Zoe on this because their VCs, Union Square Ventures and ante, are examples of investment firms that are looking at advancing human agency, advancing a humane vision for society and a humane vision for the internet, and the way in which we're building these institutions. So I've known Brad for a long time through different circles, and Zoe I got to know through her support of the Resident Computing Manifesto, which I've talked about several times on this podcast already with other guests, which is that technology should make us happier. It should make us better. And all of these businesses that we're doing, it's about increasing human happiness and agency. So welcome, Brad and Zoe.
Thanks for having us.
Thank you.
If Brad, you could talk a little bit about your background. I know that you are you're someone whose venture capital and career extends back to the various sort of earliest ages of the emergence of the web. And through Union Square Ventures, you know, there's probably no VC that I look to that has had a more positive impact in funding really interesting companies, funding the companies that became social media, that became Web 2.0, and advocated for a bunch of good things. So I wonder if you could talk a little bit about your background and how you came to start USV and the work you've done.
Sure. So the background actually goes back a little further than the early web. I started a career in technology in 1979, working for AT&T, and actually got to know open source and Unix and mini computers, and had to learn how to sell open source up against a closed source operating system from IBM. So I've been thinking about that and exposed to that world for quite a while. In the mid-90s, I ended up working for AT&T Ventures, a captive venture capital firm. You know, at one point I was exposed to working with Fred Wilson on a shared deal in New York. And then after AT&T Ventures was brought back in-house, and that's a story in itself, I helped a friend start an internet advertising company and worked on that and brought Fred in as an angel investor. And then the two of us went off to, once that company was fully fledged, we went off to start Union Square Ventures. And so that was in the 2003 timeframe. That's the background. You asked about our interest in the early web and Web 2. I'll say a couple things, and I think we're going to get into a much larger conversation about this, but the couple things are that in the mid-90s, when we started investing in Web 1, we, like probably, I know you, Rabble, and probably pretty much everybody else involved, thought we really were democratizing access to knowledge, wealth, and power. We really thought that we were opening up the world. And we fought for that. We fought for that by investing in companies that were taking advantage of this new distribution medium to work around the sort of natural monopoly of the existing media industry that controlled distribution. And it kind of blew things wide open. And we had this enormously optimistic moment where we really thought we were not just going to change the media industry, but we were going to change society. And, you know, we believed in the Arab Spring. We believed that these technologies would open up, would sort of force a kind of liberalization, not just of an economy, but of also of all of society. You know, I think we'll get into a conversation about what happened,
Yes,
and how we missed that boat and why. And I think that's a really worthwhile conversation.
USV is invested in so many iconic companies. You know, Fred was on the board of Twitter, but I also remember just the work you did with Etsy and I believe Zynga and Delicious was a small little investment that you guys did. There was this sort of moment where the internet had gone through boom and bust cycles. And when you founded Union Square Ventures, it was really a down point. It was a moment in which the internet economy had been sort of laid waste, and there's all these .coms that went out of business, and a few of them survived, like Amazon and Google. But it wasn't a moment where it felt like there was a wave of investment and a wave of money, and it made a lot of sense. You actually set things up during a down period.
Yeah, that was actually very fortunate for us. I mean, it was really hard to raise a fund. Fred and I hadn't worked together before. Most investors, most institutions, endowments, and pension funds and things thought that you had to have more infrastructure than just two partners. They also had been burnt investing in first-time partners or first-time funds in the late 90s. They kind of got overcommitted in the late 90s and watched them all go to zero. And so going out and telling the market that it was the two of us, that we were going to invest in this sort of fuzzy applications layer of the web without any hard intellectual property protection or any patents or anything, and that we were going to build a business on that, took a long time. But once we were in the market, it was kind of an open field. I mean, we could, Twitter as one example, when we first met Ev and Jack at Obvious Corp in out in South Park Commons, I think it was, that office. Yep. Nobody else. I mean, I think you'd had one other conversation with Benchmark, and Benchmark said, if you get paid by the telcos for your SMS minutes, then come talk to us. But I think one of the things that I am proudest of in Union Square Ventures is that we were willing to take risks on companies that didn't have an obvious business model. And certainly at that point, Twitter didn't. We believed that if these networks would create value for their users, that there would be some way to build a business around that at some point. And we were perfectly comfortable with that risk. It worked out well, and we could talk about whether or not the ultimate business model was a good idea or not.
Yeah, well, we'll get into the problems of the business model and the protocols and not platforms and that whole debate. I'd love, Zoe, for you to describe, because your path towards being a VC and founding ante actually comes from international development work.
Yeah, that's right. It's a little bit of an unusual path to venture. And I should say up front, in many ways, ante itself is a little bit of an unusual venture fund. We're also a very new venture fund. We've just been around for a couple years. And our focus is on human agency and digital freedom. So tools that generally give more control over things like privacy, data, assets, algorithms, infrastructure, etc. And I should also say I'm hugely indebted to Brad and the USV family for being incredible mentors and sources of inspiration and wisdom along my whole path here. So I should say that. I starting this fund was also challenging, although maybe in sort of different ways than what Brad describes, because as far as I know, no other venture funds have really, sort of explicitly launched with this particular thesis. And I think in many ways it attracted a lot of like skepticism or like side eye or whatever. But to me, it felt like the right moment in history and also the right moment in the market to pursue this sort of strategy. And a lot of that was informed by these earlier chapters of my career that were very far outside of Silicon Valley and tech. I spent most of my career in investing. I started, at Goldman right out of college. But the period you're talking about, Rabble, was a few years in which I was working at the World Bank, at the International Finance Corporation, which is like the private sector investment arm. And I was doing like debt and equity investing and some structured finance. But I became interested in a lot of the domains that I'm focused on now because I ended up doing a lot of deals and work in conflict zones. So I lived in Iraq for a while. I spent time in places like Somalia and South Sudan and DRC. And, I was always there with an investor hat on, but I became very interested in how tech was being used in a lot of these contexts to do things like surveilling and manipulating and controlling people. But also there were all these ways in which folks were very resourceful and creative and were downloading Signal to share information, or in the case of Iraq, people were using Twitter in very creative ways to report on what was happening on the front line, or, mining Bitcoin because local currency wasn't reliable. And I just found all of those examples really fascinating. But it always sort of stayed in the back of my head, and I went back to grad school and I spent some time working in national security and policy. But it definitely planted some seeds that I think that led me to see that there was this gap in the market a couple years later when I eventually started the fund.
I think that most people don't know how venture capital works. Like both of you talked about raising a fund. In VC, you have LPs, limited partners, and these are the usually larger institutional investors, that are putting together a fund. I wonder if you could talk about the fact that your role as a VC is in some ways both selling to the vision to investors of what you're going to do, while then you evaluate the companies that then pitch you. I mean, that's sort of one of the fascinating things I think people don't realize, is that you've got this sort of intermediary where you have to sell the idea, the vision, who the team is, what the investment philosophy is, how you're going to get ready, and then use that to choose which companies to build, to invest in and to build up and extend, so that you can raise subsequent rounds. I know USV has several rounds. I think, Zoe, you're still in your first fund, but I think it would be really fascinating if either of you could talk about what that experience is like, because it's not like the money appears magically out of nowhere.
Well, one thing I'll just say, and then Brad has had many more years of, of navigating these different lines. But, when I was first starting the fund, I was interested in all these different models of financing. And I briefly explored whether there was a possibility of creating some sort of, interesting hybrid fund structure where you could do venture investments and also potentially use other types of financial instruments or tools, and also, be able to support open source projects that might not be venture scale. Whether there was just like a more creative way of doing various types of funding and financing. And I think, there are models out there that do exist, and, it might be worth talking about some of them. But to be totally honest, I think the advice that I got, which was a little bit sobering at the time, but I think was right, was like, Zoe, you are a first-time fund manager, solo GP, raising, this kind of mission-oriented fund with a provocative thesis. Like, you got to keep the structure vanilla. Like, you can't manipulate too many levers here. And, I think ultimately that was right. I think there is a lot more room to experiment, in the market more generally around different forms of capital. And I think it's a shame that entrepreneurs often feel like there aren't that many options when it comes to raising funding. I wish there were more, but, I think there were also like practical reasons that it did make sense to raise ex ante as a venture fund. And I think actually in retrospect, as I've had more time to reflect on it, I think there's been a lot of utility to having a lot of clarity around exactly what it is that we're doing and what types of returns we're pursuing. And so, maybe it's better that we didn't end up in one of those hybrid structures, but that's not to say that I didn't explore that in the really earliest phases.
Hey, this is just a quick interruption to ask you to follow Revolution.Social on your podcast app or YouTube. And if you're already following us, please rate, review it, and tell a friend about the show. Thank you so much. Yeah, I'm wondering, Brad, if you could talk a little bit about what it's like to interact with LPs and the role they play.
Well, LPs ultimately fund the the innovation economy, right? They funnel their funds through venture capitalists who make the choices about what to invest in, but they are choosing which funds to invest in, and so they are important. It is kind of always useful, at least, to remind entrepreneurs that venture capitalists had to raise the money too, and they put up with a lot of crap, frankly. In our first fund, I mentioned it was tough, but we did 80 meetings. We flew across the country and had people cancel after that. We showed up at their doorstep. We had people fall asleep on us. We had people walk out on us. We had, it's just, it feels just as bad to be out there, raising the capital. Eventually, if you've had a couple of funds that have done well, it becomes a lot easier. And that certainly has been the case with Union Square. But I bristled a little bit when you described us as intermediaries, because I thought we were all in the business of eliminating those intermediaries. But yes, we are intermediaries.
No, but you have this idea that somehow what we were doing with the internet is disintermediation. This idea that we allow these people, everybody, to connect directly with each other. But what we've seen in all the marketplaces, you guys, were really important behind Etsy, is that intermediary role, that market maker, that connecting is both really hard to do and also a really valuable thing.
Early on, the marketplaces that emerged, not just marketplaces for goods, but marketplaces for information, Twitter, Tumblr, they are really important. It does take something to kickstart those marketplaces. Etsy was kind of interesting because, they found a niche in serving crafters who were their own, the crafters were the buyers as well as the sellers early on. They were buying from each other. So it started the flywheel moving in that way. But it is hard. I think we now pretty much understand what it takes to start a marketplace. I think it's actually quite difficult to start a new marketplace in a place where there are existing marketplaces, because moving people to a new venue is difficult. But I also think that we may overestimate the value, particularly in information spaces. I think it's interesting to watch Reddit complaining about the degree to which they have been ingested by large language models when they're not actually ever asking the Redditors whether or not they had an interest being discovered by language models or not. They basically decided to extract rent in the middle there, and then and I think what we're going to see is lighter and lighter weight marketplaces over time that extract less from the actual creators of that value.
And is that because with agentic programming, the cost of building the technologies of equivalent stuff becomes lower? So it's the cost only becomes, how do you convince people? It's this sort of, I've seen this argument that says, and I'd be curious what the two of you think, that as we move to a world of more agents, then the value of the DoorDash versus Uber Eats goes down because the agent will just pick the lowest cost. Does the fact that technology creation gets cheaper and cheaper change the dynamics around these marketplaces, which were the moats?
The thing that still might be in short supply is like trust and reliability. And I think those sort of things will improve as agents themselves become more functional and as we feel, more safe and secure in deploying them in our everyday lives. But I think like that's where you'll continue to see, whether it's an intermediary or a platform or a marketplace play a role, is where there's some sort of built-in guarantee around trust or reliability that makes it worth potentially paying a premium. I think the other, maybe this is, a little bit orthogonal, but, we've been talking to a lot of various AI product builders about, what sort of software do you build in-house versus buy? And like, there really is, I think we are going to see this kind of bifurcation where there are lots of tools that you can kind of spin up easily yourself through vibe coding or whatever. And I'm glad to see the cost of software coming down so meaningfully for those types of simple applications. But I do think there's a whole host of categories where like it really just doesn't make sense to vibe code it yourself. Like trying to recreate Slack is like quite complicated, right? And there might be lots of reasons that it actually makes sense to continue to buy certain types of software. And so I think that's I have a friend who like has this great analogy that around bakeries, right? Like there's certain things like a biscotti that like you should just make at home. Like it's so easy to make. Whatever you make at home is going to be better, and it's like foolproof. But like a croissant is really hard to make. Like it's not even worth it for you to try to make the croissant at home. Even if you like follow all the directions, you should just buy it, right? And I think that's essentially what we're going to see with software. And that's also where I think like a marketplace that can offer something that puts it in the croissant category are the ones that are likely to persist. I don't know if you would agree with that, Brad.
Well, I definitely agree that's true, and I really like the frame of is this? And it's going to become more and more important to have trust in the content that you're consuming or the relationship that you're creating, and so I definitely agree with that. I don't know though that I think we're talking about a much bigger question. I believe that we are at the cusp of a transition that's as fundamental and as profound as the transition to the original internet. And I think it's going to change things in ways that are unexpected, and really important. And it's a moment that we have to pay attention to, because we have an opportunity now to shape something given what we've already learned about how things could go wrong. And it's not going to be here forever. That this moment is going to come and go. But I think it's worth maybe digging into, first of all, what happened with the original promise of the internet, how we lost it, and then digging into how to make sure that we don't lose the promise of AI.
Yeah, I mean, I think that people forget that before we had the web, we had something like an internet. It was AOL and CompuServe and Prodigy. We had these online platforms that you would directly, install their specific software. It directly connect over your modem. You'd be able to do it. And the entire world of what you saw on AOL was controlled by that company. Now, people could post forums and chats and all sorts of things like that, but it was an entirely locked down thing. And the excitement of the web, the browser, was that anybody could put up a web page. It became a permissionless protocol that was really powerful. And I think that looking at what happened and where we're going is so useful, especially if you look at the social media era, where it felt like from about 2004, 2005 to 2012, there was this sort of moment of huge amount, Cambrian explosion of experimentation. And, a lot of your early investments, Brad, were in those specific companies that had a very open and participatory vision for what the internet would look like.
Yes, and it was very expansive, and people believed in the promise, and people weren't sort of trying to negotiate for their cut up front. They just thought that they would, build something and they'd find, it would create value. I probably overused the Cambrian explosion model as a way of thinking about what happened then. But, basically an asteroid hits the Earth, dinosaurs go away, mammals emerge, all the niches are up for grabs. Nobody is serving those needs. And so all of a sudden there's an opportunity. You're not competing with an incumbent in an existing space. There's a new space that was created by technology, and you have an opportunity to move into that space. And you could grow very, very quickly there. And so that is the phenomenon that I think we're about to see a repeat of. And so those are the moments when I think venture capital can be very productive and can create a lot of value particularly by supporting things that may not be as obvious as some of the foundational stuff, but the stuff that is going to ultimately create value for consumers.
It's fascinating to me because when I look at the history, I feel like there's a period of the Web 2.0 era where you get these companies that eventually Google and Apple and Facebook consolidate around this, and Twitter and eventually Snapchat, and then eventually we get TikTok. And you have this moment which initially it was very open. It was very easy to build on top of it. You had the F8 conference, you had Farmville and Zynga, you had Twitter with its open API. And then in finding business models, you have this moment where they go away from being open and they discover that they can just make a tremendous amount of money controlling the experience, controlling the algorithm, controlling the ad delivery. And so that is when Facebook shuts down the online games. That's when Twitter shuts down its open API. And you, as sort of one of the voices of the Twitter being open, I wonder if you could talk about sort of what that was experience-wise and the dynamics that pushed them to not find a business model that stayed open, but instead kind of consolidated all of Twitter inside the company.
Before Brad answers that, I want to jump in and say, I think like this, Rabble, you're totally hitting on exactly the double-edged sort of venture, which is like, it allows entrepreneurs to take these huge risks. It's like the ultimate, risk capital for, experimental ideas, which is amazing. And also it is like the incentives created by venture capital that I think also caused a lot of it to then go downhill, right? Like, I mean, you mentioned like it was the pressures of monetization and realizing that actually there were these huge profit engines underneath a lot of these social media platforms that fueled their kind of downfall or fueled the closing of them. Like, where did that pressure come from? Like, frankly, I think a lot of it came from VC. And I get asked about this a lot because one of the, broader objectives of ex ante is to think about, like, how do you move beyond surveillance capitalism? And the irony is not lost on me that venture itself is part of what created it, right? And so I think we have to be intellectually honest about that. And also, come up with a compelling reason why this time is going to be different. But Brad, please go back to the Twitter example, because I think it's such a good one.
So I don't think that history could have been different. I don't think that it would have been possible for Twitter to create a business model that was based on being paid by the people who are receiving the value. So, subscription model of some kind. The reason for that is nobody understood what they were going to get from these services early on. And so advertising was hugely important for the early internet because it allowed people to sort of wander around and explore different things and not feel like they were, having to decide whether or not to pay $9.99 a month or whatever before they, could have a taste of what it is that they were going to get. And so I think advertising kind of, it came into focus as the obvious business model. And, once you have advertising as the obvious business model, all of a sudden you have to control the experience, the user experience, because you want to be able to insert the ads. And so
you want to know that people saw the ads.
You want to be able to tell the advertiser that somebody saw their ad, right? There was this moment, I forget exactly when, was it 2013 or something, or before that Bill Gross came up with Uber Media, and he did something that we now call in the crypto space a vampire attack. He tried to recruit and pay some top-level talent to move over to his, and he used the fire hose to allow people to interact with, their existing fan base on Twitter, and it was a kind of brilliant vampire attack. It showed the potential weakness of an open system in terms of its ability to sort of, control.
Yeah, Twitter was very vulnerable to attack.
Yeah. I don't know that there could have been a different history there that I don't think we could have launched Twitter with a subscription model. And I don't think we could have kept Twitter open if there wasn't a way to prevent a vampire attack.
One of the things that's fascinating is very quickly as that moment is happening, as Twitter and Facebook consolidate around the business model, that's when we start getting the emergence of crypto. That's when we start getting the emergence of a payment system and a finance system and people starting to experiment with other ways of monetizing or building businesses around that. And I know both of you have spent a bunch of time investing in that and looking at that. And, by definition, blockchain project, cryptocurrency are permissionless tech. So I wonder if you could talk about there's this thing which is some people think all crypto is scams or it's all going to save the world. And it's not the main thing that we're talking about now. But in that era of 2012, so by the time Bitcoin gets enough established that people actually start knowing about it, through the launch of Ethereum, through the launch of all sorts of ICOs and everything else, it becomes this other model for how business could be done on the internet that isn't advertising.
We early on started investing in businesses because we saw the possibility of bootstrapping a network by creating an economic incentive that was more of a fair distribution of value among the creators and consumers. Instead of an intermediary that's extracting rent for creating the platform, we had the opportunity for, if the transactions within the network were in the currency and you had to hold the currency as a user of the network, and as more people came into the network, the theory was the network would grow in value and the participants, both creators and consumers on the network, would benefit from holding the currency that was the underpinning of the network. And it felt like a novel approach that was very different than equity, which is where the venture capital business has been. And equity by definition means that there's a third party that is making an investment and has to be repaid, as Zoe was saying earlier. But in the crypto model, it seemed like almost a magic opportunity to bootstrap a network and allow the participants to participate in that value creation. We got caught up in all the scams, and they overwhelmed all of the sincere players in the market that were looking to, try a new model. And it was a big distraction from, what the underlying opportunity really was. I actually still believe that we will see this value and we will see this model play out, but we still have a ways to go to sort of work through the distaste that everybody has been left with.
Just to add on there a little bit, I mean, I do think that there have been these, notable developments in technology around things like blockchain or advanced cryptography that actually provide these meaningful alternatives to big tech, and big tech / the kind of platform era, and that is exciting in so many ways. I think sometimes there's been a fixation on decentralization for the sake of decentralization, and I think we've learned lots of lessons about the times in which that can add a lot of benefit and value, and also the ways in which decentralization and, community governance can be really, really hard. And there are some real benefits to centralizing certain types of processes or decision making or technological development generally. But I think there's a lot, to me, I think there's like the technology itself. And then there also, if anything, I would say the intense interest in crypto and Web3 in the last handful of years, to me, indicates something about the cultural moment we're in and the zeitgeist around wanting to have more ownership over your data, over your assets, over the networks you participate in. And I think listening to that signal is worthwhile. And thinking about how some of that signal can be captured in the AI moment that we're in now, I think is also interesting. I was thinking a little bit earlier when both of you were talking about the optimism and excitement there was in the kind of early days of social media, which I remember, of course, as well. And I found myself wondering in that moment, like, was there also a kind of like festering backlash that could have been perceived in that moment or not? And maybe there wasn't. Maybe it was really just like pure optimism. I think today we're seeing something very different. I see indications all the time that the AI backlash is here, and I think it is linked to that cultural undercurrent around who owns what and who has control over what it means to be human today.
Yeah, I mean, I remember trying to sign people up at the very early days of Twitter. And I went to my friends and I'm like, here's this thing. And they're like, why should I get random stupid text messages from my friends about what they're eating for breakfast or things like that? And at least for me in the early days, and and then I went and worked with the Flickr team and others, there was this attitude that like this was vapid and superficial and not real. And then the Web 2 or the Web 3 era was very utopian in its language and use of it, and very exciting about that kind of thing. And then it felt like it sort of got turned around, and then people are like, oh, it's all a scam. And so it was like either all amazing or all a scam. And then social media went from nothing, like this is stupid and superficial, to, oh my God, it's, taking down governments. And
there was a sort of an anxiety, there was an anxiety about putting your credit card on the web. There was an anxiety about exploitation of children and things like that. And, there was a kind of moral panic back then that did accompany the emergence of this and sort of the lack of control. And there was actually a counter revolution, I guess, that was launched by the media companies, basically saying, we can deliver a safe space for your kids, and you just have to sign up to these, Stop Online Privacy Act and the, Protect Intellectual Property Act. And so that was a real effort to capitalize on that moral panic to bring back. The same thing is happening with AI today. I think crypto is a little bit different. It didn't touch as many people as directly. If you weren't involved, it didn't really affect you quite as much. You heard about it, you read about it. But with AI now, I think I think there is a panic about, the potential loss of jobs, the social dislocation, the degree to which, people who, worked hard, went to school, got a big degree, and all of a sudden realize that they're vulnerable, now feel, quite a bit of panic. But it has always been true that technology is neutral, that it isn't the technology, it's the way the technology is implemented, and that we have a choice about how we implement that technology. And, that's the thing that I think we need to be focusing on now.
This brings up a fascinating thing, like the role of technology and its neutrality or not, because Zoe, you have this quote, which is quite literally, technology isn't neutral and you can't divorce it from the intended and unintended consequences. It's like we are building all of these technologies, be it agentic programming or, blockchain or cryptocurrency or the original, existence of the web and these protocols. And it is neither neutral or lacking neutrality. Like, it exists within the context. I wonder if you could talk about some of your sort of investment philosophy of Zoe about sort of what Brad said.
Yeah, I mean, I don't think technology is neutral, and I felt like there was a period, particularly in tech, in which it became this sort of fallback position where engineers would say, "Oh, I'm just building the tools. It's how people use it, right?" And
it's just the AI.
It's like technology for the most part is purpose built, and when something is purpose built to serve some sort of aim or objective, like that aim and objective is embedded with a whole set of values and potential outcomes and consequences that have to be accounted for. That's like, basically how I feel. I think what that means from my perspective when I'm looking at a company or startup is that we are thinking about first order consequences, but we are always trying to think about the second and third order consequences. Now, that can be very difficult because we don't know exactly how technology spaces are going to play out. And so for in large part, we actually, we have to have a lot of trust in teams, right? We're a minority investor on the cap table. In our case, we don't take board seats. And so there does have to be this real, sort of values alignment with the people that you're backing, that when faced with these kind of novel decisions about who to sell to or how the technology is used, probably in these ways that are totally unforeseen, that they will make choices that we could all stand behind.
Yeah, it's a tricky thing. I'd love to hear your response, Brad.
Well, yeah, I mean, it's interesting that to find Zoe and me on opposite sides of this. I think we probably agree at the end of the day, but I think we're maybe talking about things slightly differently. So I'll use as an example, early on when we started investing in networks, we had an intuitive understanding that there was some value there, but we didn't understand it as network effects. And, the more time we spent with these companies that we were investors in, the better we understood that, the more people in a network, the more valuable that network. And as we began to understand that more deeply, we realized there was some real defensibility there. What we didn't understand is that it was going to lead to the consolidation around Google, Apple, Facebook, Amazon. We didn't understand that it was so powerful and there was so much value in the scale of liquidity within a network that there was no way that a startup could compete with those dominant players. And so we, when I say technology is neutral, I mean, we didn't set out to say, okay, we're going to support technologies that will lead to this consolidation. I think one of the things that Zoe was saying is that we have a moral responsibility to try and anticipate what the consequences of our investments are. And I think we do. But I also, I'm not going to lose a whole lot of sleep that we missed that. I would lose sleep if we didn't learn from that lesson and approach AI differently.
I mean, to give USV some credit, because you're not tooting your own horn enough, but you guys did a lot of the groundwork to get the concept of B Corps built into the public benefit laws. The idea that a venture capital firm can invest in a public benefit corporation. Now we see Anthropic as this massive public benefit corporation where it's in their bylaws that their impact on the environment and their workers and society have as much value and need to be considered at the same level of just the stakeholders. Before USV went and fought for that and lobbied with a larger movement of public benefit corporation folk, you couldn't do that. You had to justify these other public goods as a benefit for shareholder value. So you guys have changed the industry in this way. I remember the very first time when I was talking to Chad Dickerson over on Kelly and Elliott McRae, who were at Etsy, and they were taking it public. And the idea that they could take a venture-backed public company public that was a public benefit corporation was a radical departure from this other, which says that you have to take into account to this stuff. And now Blue Sky and Anthropic and all these others are public benefit corporations, and it seems normal. But I think that's one of the lessons that we had from that sort of Web 2.0 era is that the underlying rules need to change some.
I think that it was important to establish a framework whereby you could not be sued for supporting a community or your employees or other stakeholders. That was probably a good thing to do. But I don't know that we should overstate it. I think markets are really powerful. Markets drive a lot of behavior. I actually think there's kind of a funny anecdote about I think it was the year we invested in Twitter, we invited Biz Stone to present to our LPs in our annual meeting. And he presented, and everybody was very excited about this hot new young company. Nobody understood it, but everybody was sort of feeling good that we had gotten into it. And then, toward the end of the meeting, I was at the lectern delivering some update or something. And Biz Stone raises his hand in the back of the room and he says, "Does USV have a mission?" I forget exactly what the language was, but but it was very definitely focused on the idea that we should have a purpose, and that purpose should be above and beyond equity returns. And I'm standing there in front of all of the people who invested us,
who want the equity returns,
trying to think on my feet, and I said, no, but we believe that in this era of open innovation and these large networks, that the networks themselves have to attract an audience based on a set of values, and so we support those companies that commit to this set of values that attracts that audience, because we think that's the only way you can actually deliver a return to the people in this room. And so I think that's true. And the thing that we're going to need to do in the AI era is to understand what the market forces are and whether or not we have market failures. I have actually come to think of a network effect as a market failure. Kind of by definition, it reduces competition. It prevents new entrants. It is a kind of natural monopoly. It is a kind of market failure. And so what is the ultimate source of that market failure? It's a misunderstanding of property rights. It's a misunderstanding of who controls, who owns the data that's created as people interact with these intermediaries. And I personally have the view that, we have actually, when people talk about ownership of the data that they create as they interact and the need to ensure that ownership, that's actually not necessary. What's needed is an equal right, an equal interest in the data. It takes, my partner Nick Grossman likes to say, when you have two players in a network, it's like, it takes two people to create a baby. And, now we're just basically arguing about custody. It shouldn't be one person that has that custody. And so if individual users have an equal interest in their data, if individual users could do whatever the platform does with their data, with their own data, we would undo a lot of the market power associated with network effects. And how that interacts with the agentic economy is that is going to be a very, very important battle that gets fought over the degree to which I have the ability to access the data I create as I interact with Facebook or Google or whoever else, or one of the large language models. And so if we get that right, I think we don't need to necessarily legislate or regulate an outcome. We just need to allow that market to work.
I mean, in some ways, if we legislate too much right now, we end up locking in the network effect so that a few incumbent players get regulatory capture. I'm very curious what, Zoe, you have to think about this, because when I see it, I'm like, this is not too similar to the cable companies needing to tear up our streets in order to bring cable television to people, or radio broadcasters who have to use the public airways. The only way these large language models can exist is if they have the vast majority of human creation, like human ideas and creation. And some of them are open source, but a lot of them are banking all their return on the investment on the idea that they will be the winner and they will have some exclusive access to all this stuff. I wonder if you, as an investor in smaller, more nimble companies that are existing in this AI agentic era, what do you think about it, and how do you talk about these companies?
Well, I want to go back a little bit to this question about the value of data vis-a-vis users, and I think we're witnessing a big shift where in the earlier era, data collection was valuable because of advertising, right? And there was some utility for users in that, in the sense that maybe you'll get targeted with ads that are a little bit more, germane to your life and might help you find a product you want or whatever. But I would argue that utility was somewhat limited, and for the most part, people didn't always love it or found it creepy or whatever. Today, the value of data collection is really around the training of models, right? Like all of the kind of data broker or data collection companies of the AI era, including like the Mercors of the world that are focused on generating new data sets, are not selling primarily to advertisers. They're selling to model producers. And that I think is interesting, because I do think that the utility for end users, if you have control over where that data lives, is much, much greater than the utility associated with advertising. Potentially, it means that you can have AI services that are much more personalized, much more tailored to you, that speak in your voice, that know how you like to consume information. I mean, all of the things that we could, come up with together. And so then, to me, the big question, I know Brad thinks about this a lot too, is okay, where does that data live, and who has access to it and who gets to control it, right? But I do think that the underlying value of the data itself to the user is totally different today than it was in the earlier era.
Yeah, to be specific, I think it's not just training the models, right? It's also how we interact with the models and the degree to which we can personalize those interactions. Yes. So it's about the context window, and it's about the memory. And, I think we should acknowledge the reality that we are headed to two possible futures. We are headed to one possible future where the large language models essentially create something that looks a little bit like an app store. They get a lot of wrappers that around those models that create specific values in specific market segments. But basically, they absorb not just the training data that they ingest by crawling the internet, but the information that every end user imparts as they interact with them. And they would like to use that in the same way that Apple has kind of used their app store to sort of identify where value is being created and then suck it into the core, right? And that's kind of the playbook. And if we end up with a world where there are 4 or 5 large language models that have, very intimate relationships with very large numbers of users, we are going to need to regulate those. It's going to ultimately look a lot like the telecommunications industry, and we can already see, the degree to which there's a kind of inherent corruption between the political power and the economic power that sort of feeds each other. You can see this in Bezos controlling the Washington Post editorials and things like that. We already watch it, and so. How do we prevent that? We have to understand the nature of this market power comes from the data. If the consumers have control over a data asset. And it doesn't have to be exclusive, but it has to be, they have to be able to, take that context and memory and move it from model to model. We end up in a market where it's possible that the large language models become commoditized, that open source catches up, that we end up with a larger number of smaller companies competing in an open marketplace, which is a great thing for venture capital, but it wouldn't create the kind of outcomes that we've begun to think are inevitable as we look at winner take most, models in the Web 2 era.
Yeah, I mean, it's fascinating. We see that moat that they're trying to construct, which is like your chats with, Claude or with, ChatGPT or Gemini or Grok. They don't expose the model that is constructed about you, the history of it. There are all these documents, probably markdown under the hood, that each of these agents are constructing as they interact with you, or open claw instances, and they get more and more information. And if you can't export it, then we're building exactly the same kind of lock-in that will exist. And that's for individuals, but it's also for companies. Like if you've built your entire company stack around integration with a bunch of Claude agents, and the knowledge of how those agents work exists on some server that you don't have access to, then you can't switch.
Yeah, and I would argue it goes beyond lock-in. I mean, that is a problem, of course, but also just that the quality and type of data that's collected, I think, allows for a level of psychological manipulation of individuals that we just have never seen before, and we don't know what that looks like. I mean, I did a lot of work around disinformation a few years ago, and obviously that was all focused on news feeds and on social media and, kind of niche conspiratorial communities that people might end up in. And I think one of the things that's so kind of strange and unnerving about the AI era is, somebody could now fall down, an extremist conspiracy rabbit hole without even a community of people coaxing them to do it, but really just alone with a chatbot, right? And it becomes this kind of like echo chamber of one, which we've never really seen before. And I don't think we fully understand the consequences. So it's lock-in, but it's also like, in some ways you're really handing over potentially like the keys to a lot of your psychology to a third party in a way that is, it's just scary and a little unprecedented.
So the really difficult problem here is to figure out how to approach that without being patronizing and without trying to, construct a reality for people. How do you give people both individual agency and an opportunity to basically manage their own choices and not be pulled into this rabbit hole that Zoe's talking about? And I think it comes down to you have to allow individuals to control context and memory and to be able to interact with multiple service providers on the back end. And I think if you do that, I'm a believer in people. I believe people will do not just what they want, but what they want to want. And I think that we will actually shape the market. The dominant economic powers in this space today, the ones that have raised enormous amounts of venture capital, don't want that outcome. Though they want to have everybody within a single environment and a data store that that they control. And one of the mechanisms that I think it's going to reemerge is the question of what does it mean to be represented by a bot, and can that bot actually have access to your accounts? And if they try and prevent a bot that you've authorized to have access to your accounts, you won't be able to use that bot to essentially test a couple of different markets, bring back a proposal, curate your experience for you for your benefit. You will be, they will be able to prevent you from accessing those underlying services. I think that's a fight that we need to see play out pretty soon.
It reminds me a lot. I have this app I built, Divine, which is bringing back old vines and as an open way and filtering out AI slop. And the metaphor I use in talking about it is like, it's like podcasting. And early days in podcasting, the podcaster said, it's my feed, it's my media host. You can't like intermediate and like insert your own ads or everything else. Like the downloads have to come back from me. And the podcasters got together and they organized on a few concrete things about it being always they get to host their own feeds and they get to set the standards and they get to host their own content, and that let them build out ads. And so podcasting defended itself from sort of the centralization that we had now. And now in the AI era, we have all of the spectrum from people running OpenClaw on their own Mac minis through everything exists in these, context window controlled systems. I would love for both of you sort of as a bit of a conclusion, thinking about the AI era, thinking about agents, thinking about what we're doing going forward, and how do we build business models, how do we build businesses that are anti-authoritarian, that are pro-democracy, that empower users, that build the world that is inclusive that we want, given the complicated systems and power dynamics that are going on.
I will say that I think there's been this kind of like false trade-off that people sometimes sort of gesture towards, which is that more openness means less safety when it comes to AI. And I understand the concept generally, right? Like if you have AI that's proliferating and doesn't have, many guardrails or whatever, like, yes, things can go wrong for sure. But I actually don't think that that's the right way to think about it, because that will almost always lead you to a conclusion that we should lock down more, that we should have less open source, that fewer people should be in control.
It's like a nuclear arms race or something. Just only a government
totally.
can control this.
And that creates its own very meaningful risks, which are largely anti-democratic ones, right? I've been talking to a few folks about this concept of like, what is anti-fascist AI, right? And like, how can we be building around that? So I'm definitely keeping an eye generally on the development of open source LLMs, and I'm interested in companies. I don't think it's received as much attention as it should, but like there's a company in New York called Reflection, which is building like the U.S. DeepSeek, and NVIDIA, invested $2 billion or something like that for them to do that. And I'm really interested to see how that space evolves, because I want to find these ways that you can thread the needle between safety and security and reliability, not necessarily have total chaos, but also do it in a way that does allow for that, kind of free and open internet and openness that we all want to see embedded into this next era of AI.
Rabble, you mentioned podcasting, and you mentioned, the way in which that evolved. It evolved in that way for a couple of reasons. One is that it was relatively inexpensive to launch a podcast, and the other is that it used existing infrastructure, existing standards like RSS. And so when we talk about understanding network effects and the way in which that leads to market power, it's also possible to have network effects around standards. It's just creating liquidity. If everybody's using the same thing, you can, so I think you can achieve some of what Zoe's looking for, a combination of reasonable safety and freedom, if you agree on an infrastructure that you're going to use to share information. And that's essentially what we got by accident with the original internet. And so I think there is hope. I think it's also possible that the right outcome might almost be inevitable. That once, as we start to understand more about what it means to have swarms of agents, working on your behalf and how productive that can be, you distance yourself from the direct interaction with the web, and now you have an agent interacting on your behalf and curating and summarizing and organizing on your behalf. And one of the things that I think they are going to do is strip out ads. Unless it's immediately relevant, why would they show that? And then I'm trying to understand what it would mean to advertise to an agent. Like, on the one hand, there's this whole business emerging that is the equivalent of search engine optimization, that, where people want to make sure that they're included in the large language models so that they are, their offer is represented when people ask about it. And so maybe, there's going to be advertising to agents, basically saying, come here, that
content marketing for LLMs.
Right, content marketing. But I don't know why, I don't think an agent's going to buy things. Obviously agents will buy things on behalf of consumers, and maybe you can influence an agent's choice, but it's not going to be advertising as we know it. So I think if you look at the amount of money and the degree to which the dominant networks, social media networks out there today are dependent on advertising, I think there's a fundamental change coming. And as it hits, I think we again get back to this Cambrian explosion where I think everything's going to be up for grabs, and it's going to be a very exciting moment to be investing in small companies. And so I look forward to that.
Yeah, thank you so much. I agree that it's in a very exciting moment because it feels like it's very rarely we get these moments where all of it is possible, and the structures of what the companies are going to be and what the software and the structure of the technology is going to be. And it feels like that there was a long time with social media where it didn't feel like there was any option. I think I even pitched Nick over at USV back in 2018 or the idea of building a protocol-based decentralized social media app. And he's like, yeah, well, this is a great idea. I love you and happy to keep talking. But there's no business there. And in 2018, there was not a business. But in the era today, with AI and us not having settled down, there's a real set of options. It's like, is this a liberatory thing? Is this a thing that protects democracy and human rights and individual agency? Or is it a thing that becomes a mass surveillance state? And I'm very thankful for both of you for the work you're doing, for the investing, for thinking about the social implications of the companies that you're helping fund. And also, thank you so much for coming on this podcast and sharing your vision and history.
Thanks, Rabble.
Thanks again to Zoe Weinberg and Brad Burnham for coming on Revolution.Social. Our intro and outro music is a remix of the Italian anti-fascist folk song Bella Ciao, courtesy of White Records.
This episode was edited and produced by Eric Johnson from lightningpod.fm. Our executive producer is me, Alice Chan, from Flock Marketing.
Don't forget to subscribe to the podcast and share this episode if you loved it. To sign up for our email newsletter, visit Revolution.Social.
And for more interviews like this one, follow Revolution.Social on Apple Podcasts, Spotify, YouTube, Nostos, Fountain.fm, or wherever you get your podcasts.
And to paraphrase the Zapatistas, Subcomandante Marcos, we need a social media revolution to make revolution possible. We'll be back next week. See you then.